All right, let's talk about the market open, specifically the NASDAQ 100. You know, those first 15 minutes, it can feel like absolute chaos. But what if there was a simple, totally free tool designed to find order in that chaos? Well, today, we're going to break down an indicator that does just that.
We're going to tackle this in 5 simple parts. First, we'll quickly cover what an ORB, or opening range breakout, even is. Then I'll show you how to get the free indicator yourself. After that, we'll look at the only 2 settings that really matter, lay out the super simple rules for the strategy, and finally, we'll walk through a complete trade from start to finish.
Okay, first things first. What exactly are we even talking about here? Let's define what an orb is, because it's the whole idea this strategy is built on.
You know the feeling, right? The opening bell rings and the price just explodes in every direction. It's wild, it's volatile, and it's really tough to know what to do. How do you find a clear signal in all of that noise?
Well, that's where the opening range breakout strategy comes in. Instead of trying to guess which way the market's going to go, we just wait. We let the market do its thing for the first few minutes and establish a high and a low. That creates a range. Then, all we do is wait for the price to break out of that range and trade in that direction. Simple as that. We're just trying to catch that first big decisive push of the day.
So that sounds great in theory, but how do you actually get this range drawn on your chart without doing it by hand every single day? Let's get practical, and I'll show you how to add this tool right into your TradingView setup for free.
This is probably the easiest part. All you need to do is grab your phone. That's it. We're going to use a QR code to get you the script in seconds.
And here it is. Go ahead and pause the explainer right here if you need a second. Just scan this code and it'll take you straight to the Pine script code. From there, you just copy it, go to your TradingView chart, open the Pine editor, paste it in, and hit Add to Chart. Done! You've got the indicator.
Okay, once you've got the indicator loaded up, you're going to see a few settings. But don't get overwhelmed. For this specific strategy, you only need to know about 2 of them. You can pretty much ignore the rest.
These are the only 2 you need to care about. First, duration. We set that to 15. Because we want to define our opening range based on the first 15 minutes of trading. The second one is the take profit multiplier. We're going to set that to 0.5. This little number automatically figures out our profit target for us, and we'll see exactly how in just a minute.
All right, the tool is on the chart and the settings are dialed in. Now for the fun part, the actual rules of engagement. Let's get into the nitty-gritty of when to get in and when to get out. And honestly, it could not be more straightforward. If you see a candle close above the high of that 15-minute box, you're looking for a long trade. If a candle closes below the low of the box, you're looking for a short trade. That's it. That's your entry signal.
Here's what that looks like on a real chart. The indicator draws our range for us. See that green line at the top? That's the high. Our entry trigger happens the moment a candle closes right above that line.
Okay, getting into a trade is easy, but what about getting out if you're wrong? This is probably the most important question in all of trading. Where is your risk? Where do you put your stop loss?
And again, the rule here is crystal clear. No guessing, no subjectivity. Your stop loss just goes on the other side of the range.
Let's go back to our chart. We entered a long trade when the price broke above the green line, right? So our stop loss goes all the way down at the red line, the low of the range. What this means is your entire risk for the trade is simply the height of that opening range. It's defined for you before you even enter.
Okay, so for this last section, let's put all the pieces together. We have our entry, we have our stop loss, now for that last piece of the puzzle, the profit target. Remember that 0.5 multiplier we set earlier? This is where it comes to life. The indicator takes the total size of the opening range, multiplies it by 0.5, and then automatically projects that level on your chart as a profit target. You don't have to do any math. So, let's think about this for a second. We're risking the full size of the range because our stop is on the other side. But our target is only half the size of the range. That means we have a 1.05 risk-to-reward ratio. In other words, you're risking $1 to potentially make 50 cents. Now you might be thinking, wait a minute, why would I ever risk more than I'm trying to make? And that's a great question. The whole philosophy behind this specific setup is not about hitting huge home runs. It's about trying to capture a quick, high-probability scalp right after the breakout. The goal is to be in and out fast, prioritizing a higher win rate over a single massive profit. And here's the full picture.
all laid out for you. You get your entry when price closes above the green line. Your stop loss is waiting down at the red line, just in case, and your take profit target is that blue line sitting right above your entry. The entire trade plan is right there on your chart.
So there you have it. You've got the tool, you understand the settings, and you know the simple rules for entry, stop, and exit. The real question isn't about the strategy anymore. It's about what you do next. How will you take this information, go back through the charts, and test it for yourself?